What's up, YouTube? I am back again this week. I have a little bit of a different video for you. I met with my good friend Jon Tober from Summit Funding. He is a loan officer here in San Antonio, and there's a lot of questions that I get asked on a pretty regular basis. Specifically through my Instagram account, I get a lot of people asking questions about interest rates and what to expect in 2024. So this is a conversation that we had in front of the camera so we could clear up some of those questions that I have received pretty consistently. So without further ado, I hope you guys enjoy, and I will see you guys again next week. All right, what is up, YouTube? I am here with my good friend, Jon Tober. We have worked together quite a few times, and we're here to just clear up a little bit of conversation about what is happening in the market today. I get a lot of questions about mortgage rates, and I'm a firm believer of staying in my own lane. You know, there's a reason that I have a different license than Jon does, so he is the expert. And I know that there's been a lot of questions about interest rates, especially last year. I don't know if you saw that as much as I did, but I'm assuming you probably did.
Yes, yeah. It's been a changing game for sure. Like things
Yeah.
are just moving, and it's a great topic because we're at a point in our market where things are just evolving. So I'm excited to share some good information. So those that are watching, we're gonna have a good conversation about it.
So I got a few questions prepared.
Cool.
I
Let's
know
do
you.
it.
I don't want to like blindside you, but I have a few that I've gathered from like my Instagram and from people that I've met with, and just first-time home buyers, move-up buyers. Pretty much everybody's been asking me nonstop about interest rates. So I guess we'll start off just doing a little bit of background on you.
Okay.
And then once we get the credibility established, I guess.
Yeah.
Once we get that done, then we can move on to a little bit more like in the weeds stuff about like the housing market, what happened last year and stuff like that.
I like it.
So first question I have is, how long have you been in the business? And
Forever.
yeah.
For a long time.
And also, how did you get into the business?
Okay, cool. So I've been in the lending industry since '99. So it's been quite some time. Yeah, I know. I'm like considered the old dog. I used to be the youngest guy in the industry, like getting into it. And then all of a sudden things happen. Like I'm like one of the old dogs.
That's crazy. Yeah, I was 5 years old.
Yeah, that's what I want to say. Yeah, I was 5 when I started.
Yeah.
But it's a great industry. What you can decide to get like all in and become a student of the industry, or you can just kind of like just be at your own pace. I chose to be a student of the industry because there's so many new challenges that we face, and the new stories between buyers that are buying. It's not the same type of situation, although patterns tend to reoccur, right? So it's like things aren't exactly the same, but they repeat themselves a little bit. So I started back in '99. The way I got in the industry, I'll keep it short because there is a story tied to it.
Okay.
So I was actually out of high school.
Oh, nice.
Yeah, I was right out of high school, and my mom was like, "Hey, you need to get a job." I was like, "Yeah, okay, I get it." Long story short, there's a big company locally called USAA.
Mm-hmm.
So USAA applied there. I still have the ad, by the way. She kept all these memorabilia from that time frame.
Nice.
So I told them no. They just told me they offered me the job. I said no. You're asking me Friday through Monday, 10-hour days, and I'm out. I just want to enjoy life. So she knocked on my door. She's like, "Hey, how did that call go?" I was like, "Oh, I didn't want it." She's like, "Well, why the hell not? Why don't you pick up the phone and tell them that you want to go get that job?"
Yeah.
So that's a long way of saying that my mom, and she's no longer with us, but I love her to death, and she is who got me into the industry. And I love her for it because I can't see myself doing anything else. Like I love what we do.
Yeah.
So I've owned mortgage companies in my early 20s. I've worked for some great firms here locally, and what I try to do each time I go to these, choose a company to go with, is find something I can learn from, right? Because if we can't grow from where we are, then we're just not in this type of industry. We're just not with the right group.
Definitely. Definitely.
So that's a long way to say. I've been doing it since then. I love it. Top producing loan officer with these companies, and I really enjoy helping people.
Nice.
Yeah.
What company are you with right now? Just
Yes,
so everybody
thank
knows.
you. So I'm with Summit Funding.
Summit Funding. Okay.
National company. We're banker broker. A lot of great things that are tied with our company.
Nice.
Really enjoying it, having fun.
So I do have one question that's a little
Yeah.
like off the book. What's the difference between a mortgage broker and a mortgage just lender?
Lender, good question. Yeah, because that is important.
Yeah.
And it'll tie in really well with like what's going on with our industry today, right? So when you think about what we've been through in the real estate market, we've had some really nice changes in our market. Like, well, not nice, but we've had some changes in our market.
Yeah.
And if you go back to COVID, 2019 to 2022, those are some crazy, values are up.
Yeah.
Different challenge. '08 was a totally different challenge. So what a banker broker does, and a true banker broker is going to be able to service the mortgage, right? So when the buyer pays the payment, they pay directly to, like for us, Summit Funding.
Mm-hmm.
And that would be like a traditional FHA, conventional VA, USDA.
Okay.
And then the broker world is the outside the box stuff, the niche stuff.
Oh, okay.
Yeah. So like if you have
Like physician loans and like stuff
physician
like
loan,
that.
yeah,
Okay.
yeah,
Okay.
physician loan. We're filling a need in our market, which is where I love where we're headed right now. It's gonna most likely dive close to what you're wanting to talk about, but the market right now is going back to history repeating itself, and it may not be exactly the same, but
Yeah.
the cool thing that's happening is back in '08, we were doing some loans that we just shouldn't have been doing. The industry just got a little too flexible with what we're calling an approved buyer.
Mm-hmm.
Like, there's no reason why we should have approved somebody that we don't verify income, we don't verify assets, we don't verify credit. We basically just get a name and you're approved.
Yeah.
That should have never happened.
Yeah. Yeah.
I don't know who put the yes button on that, but
Yeah. Yeah, that was definitely so, like, granted, I wasn't really that old to understand what was going on at the time. But now the more into the market that I'm getting, like the more experience that I'm getting, I see that and I'm just like, how in the hell
Yeah.
did somebody just say like, oh, I can just get your name and then you're approved for X amount?
And
like,
it's totally
that
fine.
blows my mind.
yeah, it's totally fine, dude. Come on, bring it in.
Yeah. Yeah.
So, so now where we are now is we're bringing products that make sense, that are flexible for our market, and solving a problem that really needs to be solved. So, give you a great example. Right now, some of the biggest challenges are first-time buyers and business owners. So what a broker does, what we would be able to offer is if we can't go inside of like a traditional lending,
Mm-hmm.
we can go outside that into a broker world, which is used to be, I won't get into that, but what it does, it allows us to approve like a business owner that claims a lot of deductions, and
okay.
we're able to qualify them
Yeah.
in several different other ways where we weren't able to in the past.
Okay.
Yeah.
Nice. So I guess the hot question that I get all the time, like especially from like November until now,
Mm-hmm.
what's going to happen in 2024?
Yeah, it's hard to tell, right?
Yeah.
It's like no one has a crystal ball to tell you
Yeah.
exactly, but here's what we do know. What we do know is, the Fed's going to make adjustments, right?
Yeah.
We just left some of the highest interest rates that we've had in a really long time. Like, who would have thought we would hit 8% interest rates?
Yeah.
That's crazy.
Yeah.
So Fed's making adjustments, which really what that root of your question comes down to that I think about is, will this market crash,
Yeah.
right? Because when you think about Fed adjustments, what's the reason why Fed makes those adjustments? They make it because there's weakness in our economy, things are happening, right?
Yeah.
So when you look at rates dropping, there's that fear of uncertainty, not knowing what that ultimately looks like.
Yeah.
What we do know is if those rates do happen where they start to lower those Fed rates, that should have an implication on mortgage rates. And if we just bring in the topic that we just talked about, the ability to lend, right? So like if we have more tools in our chest for today's buyer to buy a home, and we have a pent-up demand of first-time buyers, people that have had homes but they've had low interest rates, not wanting to sell, rates go down, what does that look like as a realtor as you get these people that are coming in to buy, and the market, well, like overall, like what does that look like?
Yeah. So like from my perspective, what I've seen on my side of it, granted, like I tend to work more with move-up buyers versus first-time home buyers, but I've done it all.
Yeah.
I've sold everything. But what I've seen is I know that there's a lot of pent up demand. There was a
Yes.
lot of people that were sitting on the sidelines because they saw those 8% interest rates and they were like, "There's no way I'm gonna pay for that."
Yeah.
And at the time you could get really good deals even though your payment was higher, but there were a lot less buyers in the market, and so you can actually negotiate a lot heavier.
Right.
So I was able to get a few houses almost 100K off.
That's amazing. Yeah,
So
that's awesome.
it's a lot of like the supply and demand situation. So there wasn't a lot of buyers in the market, so they could do a little bit more wiggle room because we had inventory.
Yeah.
But now that the interest rates are starting to sink a little bit, all those people that were on the fence, they were just a floodgate.
Yeah.
And so as soon as we start to see those interest rates fall down, we're going to see that floodgate kind of drop, and we're going to just get an influx of buyers that are willing to pay, asking price, over asking. We saw a lot of it in 2021, 2022,
Yep.
to where those interest rates were so small. Like, granted, I don't think we're going to get down to the 2 and 3%
Right. Yeah.
anytime soon, at
Yes.
least. But once we saw those homes get a more affordable, it caused the prices to shoot up like crazy.
And let's talk about that, because you're right. And if you going back to like what we've been through and where we're headed, 2019. Let's talk about COVID, right? 2019
Yeah.
through 2022, monster appreciation, right?
Oh, yeah.
And then let's take a look at like the close 2023. 2023, we had I think September, and I'm just talking San Antonio because that's our market.
Yeah.
So September, year over year, I think it was like 7% decline on median sales price, which means that we had an adjustment last year from all these monster appreciations like
Yeah.
what we're talking about, right?
Yeah.
So that, going back to those stories of getting a good deal on price point, getting a good deal on seller contribution, those types of deals that you and I saw were an adjustment from that market.
Yeah.
Right? And then as rates go down, like you said, demand goes in and you get more qualified buyers. That's just going to bring in that, we're not going to see like $100,000 above sales price or, those crazy numbers that we saw, but we'll definitely see some solid appreciation next year. And those who decide that they are willing to take that first step to get qualified are the ones that will reap the benefit of that short-term spike in value.
Yeah.
Right?
Yeah.
Because real estate is a long-term game. Wealth is built in real estate the longer you hold. So whether you bought in 2023 or 2025, if you're going to keep that house for 5 years, it really doesn't matter.
Yeah.
Doesn't
Exactly,
matter. Yeah. 2023 is just a blip on the screen, right? Because if you compare where we are today to where we were in 2022, you're going to have appreciation.
Yeah.
Yeah.
Oh, absolutely.
Just not that monster, 20.
Yeah, you're not getting 20% year over year.
Be nice
for
but
like 3 years.
Something will break. Yeah.
Yeah. Which, like, I know in theory it sounds great when you buy a house and it appreciates like crazy.
Yeah.
But if you're looking at it from a long-term perspective, like talking about just affordability of homes.
Oh, there you go. Yeah.
If you own a house, it's nice because you're like, oh, my asset is appreciating. I could sell it for crazy numbers. But there is a break in the system.
Yeah.
There's a tipping point.
And we felt that.
I felt it for sure last
Yeah.
year.
Yeah.
Last year was one of those years that it was tough.
Statistic on loan officers: 63% of the mortgage loan officers got out of the business.
Holy cow!
63%. That was mind blowing. But you hit on a good point: affordability, right? So it's like prices go up, and now we got a problem of those who are trying to buy for the first time are struggling to buy the home they want because the payment just doesn't make sense.
Yeah.
And then not only that, but then you got inflation, right? So then the savings of money has become difficult. So now we have two problems to solve. It's, can I afford my home, and how much money do I have to save to buy my house?
Yeah.
Right?
Yeah.
I'll just share a quick story with you.
Yeah.
And I love these moments. We had a first-time buyer. She closed in December. And single mom, 4 kids, all boys. And
dang.
Yeah. She's got a busy schedule. And it wasn't that she didn't qualify. The way she got a hold of me is she was referred to me by her agent, and she was already talking with 3 other mortgage companies. What they told her is, we can qualify you for the home you found, because she found the home she wanted. It was $300,000, and her budget was $2,500 a month, right? But for $300,000 at those price points, it was about $3,000 a month.
Yeah, I was gonna say that's pretty.
$500 spread. That's big, right? And then funds available, she had like $5K saved. right? So first time buyer, $5,000 saved. It just wasn't working. What they were saying is you needed $15,000 minimum because the seller can pay your cost, right? So
Yeah.
down payment is about
Yeah.
15 grand, and then the payment was 3 grand. So what we did for her is going back to banker broker world. We had a program that is a 1% down, no monthly mortgage insurance. We got her into that program, got her that payment. It was literally $25.67.
Dang.
25. I was like,
Dang.
okay, it's $6-7 off. She was like, I want it. Let's go.
Yeah.
Down payment, all in. Got seller contribution. It was like $3,500 total out of pocket.
Dang, that's not bad.
Oh my gosh.
Yeah,
And those,
for a $300,000 house.
yes.
Dang.
And those moments are what, man, it's fulfilling. So
Yeah.
stories like that are happening every single day.
Yeah.
And it's a matter of getting the word out, right? And just getting over that first step of uncertainty. Most people will hold back because maybe it's not the right time. You know, all these things that we tell ourselves that hold ourselves back from just taking that first step of becoming a homeowner.
Yeah, yeah, and that's kind of one of the last things that I wanted to talk about with you here. Is I know a lot of people ask me specifically because I feel like I'm more front end.
Yeah.
I have a lot more like in the trenches.
You do,
but
yes.
but I like not saying that you don't go get leads and stuff like that. But
Yeah.
it's a lot easier for me as an agent to refer people to a mortgage lender, a mortgage broker, that kind of thing.
Yeah.
So what I wanted to kind of touch on as like a last kind of question is what's the process to get started? And,
Yes.
and that's something that I get asked quite a bit.
Mhm.
And I know for my process, what I do is whenever I get a buyer, I never show them any properties until I introduce them to someone like you. I know I've sent a few to you. I have a few others that you know I work with, and it's just a matter of personalities and stuff like that. But essentially, when I get a buyer, they call me and say, "Hey, I want to buy a house." I'm like, "Okay, are you pre-approved?"
Right.
And if they're not pre-approved, I educate them. I say, "Hey, well, I'd hate for you to fall in love with something that you can't necessarily afford."
That's right.
Or, you know, just I want to see what we can work with so we can tailor it down to something that is really going to work for your needs.
Right.
And my first thing that I do is I always send them to a lender.
Yes.
And so what is the process as soon as I hand them over to you? What's the steps that they have to do to get pre-approved and to start shopping for homes?
Okay, good question. And that's important too, because as an agent, you want to make sure that you're helping them with the needs that they
Yeah.
want. Sales prices in line, all these important things, right? Which is those are components that are so important in talking to a mortgage company. So the first step, if you were trying to figure out like, okay, so how do I do this? Like, what does this look like? Never done this before. So what I would do is start with a monthly budget. Just figure out, for a mortgage company, we take 30% is for the housing payment. So 30% of your net income. So you would just take the 2 pay stubs, take the net, so whatever that number is, and divide it by the expenses you have. So expenses that we look at as a mortgage company is the things that are on the credit report.
Yeah.
Credit cards, auto loans, things like that. And we'll divide that into your income, and that should be close to about 30%. That would be a targeted payment. As far as like a personal budget, we have a online webinar for first-time buyers. So if you're trying to figure this out, that's one of the things that we talk about. We're like, okay, so here's how you do a personal budget. And what surprisingly, we've done this like over the last couple months.
Yeah.
One of the number one things that comes up in this conversation is I didn't realize how much money I was spending on all these apps.
Yeah. Yeah.
It's like
the recurring
crap.
stuff.
Yeah. It's like, holy crap. And that, and then dinners. Yeah. It's like, but I like going to the Pearl.
Yeah.
You know?
That's what gets me.
Yeah.
That's what gets me for sure. Is
Yeah. But have you
eating
eaten
out.
these restaurants?
Yeah.
So, part of it is sacrifice, and part of it is just realizing what needs to take to get there. Once you have that mortgage company, some questions to be prepared. 3 things that we'll want to know is what's the target for your budget? That at least we have a watermark. Doesn't have to be specific. Next is funds saved. How much have we put it to aside? We can leverage 401k. And then general sales price, like what sales price range do you have in mind?
Yeah.
When I use that, I can get a lane together and then start working on a pathway. And you don't have to be ready to go like right this minute. That's what we're for, right? That's what we do. Is we're going to give you the steps to get
Start
to
the process.
Yes.
You know, it's a process.
It's all about
it's a
starting.
journey. Yeah.
Yes, it's a journey.
Yeah.
Yes.
Yeah. Cool. Well, I appreciate you sitting down with me. I know hopefully this helps quite a few people because I do get these questions all the time.
Yes.
Like probably about 95% of the time, I'll have someone ask any of those questions that we went over. The big one right now, the hot topic, what's going to happen in 2024? That's like, obviously we don't have a crystal ball. We don't know exactly what's going to happen, but we do pay attention to the trends.
Yep.
And when we have people that are experienced in the business, that's how we can create a team to help you end up ultimately investing in the asset that has made the most millionaires on the planet Earth.
That's right.
So,
That's right. And start now.
Start now.
Start now, because we do know mortgage rates will eventually drop. And you don't want to go in when they do drop.
Yeah.
You want to go in before they drop, have the plan, right, and get that rolling, because it is going to be a great market. It's a matter of just getting started.
Yeah. Well, John, thank you so much, man.
Thank you.
I really appreciate it.
Appreciate that.
Thanks
Thank
for coming
This
in.
is fun.
Yeah. See y'all later.
Bye, guys.